Hi, everybody. Welcome to Canadian Mortgage Weekly. This is episode 78, How to Buy an Investment Property with No Money Down. Today, we're joined with Sam Thompson, a mortgage agent out of Barrie, Ontario, and myself. We're really excited to be here. So, Sam, let's get started. I'm really pumped. Specifically, there's a lot of questions floating around out there, especially from investors. How do we buy these properties with no money down?
Yeah, exactly. I mean, I think we'll get to home prices a little bit later, but given there's a bit of a shift and a bit of a softening, I could definitely see, some investors perking up at the fact that, maybe house prices are a bit more achievable to get into the rental industry and the rental market. And yeah, oftentimes that's probably the first question, right? Is how do we get started without having to pay anything?
How do we get started? That's right. So we got a really awesome episode planned for you all today. Sam and I have taken the time to prepare some good tips to just get started and help you get a good format kind of set up before you get started with buying a rental property with no money down, because it is an investment that a lot of folks do want to get into.
Mhm.
And a lot of folks don't really realize that if you already own your own property, you're able to easily buy an investment property. And you don't really need that much extra income to qualify for that. So let's get into that today. One of the first things that we always recommend you do when you're getting started with buying any types of property, Sam, is to get pre-approved, wouldn't you say?
That's right. By, consulting your mortgage professional, whether it's, myself, you, Joe, or Terry Lynn at the office, that's the best way to get started because, I mean, again, I say it a lot with our first time buyers. There is great resources out there. Rate Hub has a lot of good tips, and a lot of those offer mortgage calculators, all those types of things. But there's factors and information that you can't input into there. So by chatting with somebody, we can, properly and correctly guide you into getting an idea of, a max purchase price, and especially on the rental side, we can work on getting that pre-approval for you for that purchase.
You bet, yes. And also, like, consulting a mortgage professional, we'll be able to just also run through uh, your profile, not
Mhm.
only on your specific bank that you work with, but just all the banks. And maybe we'll be able to set you up with a better mortgage or additional funds with an alternative bank. There's lots of different things that can happen from that initial consultation.
Mhm.
But yeah, the second part is once we get all that ready for you and the numbers look good, then the next step would be to refinance your home that you currently own, the home that your family owns, the home that you've had for a number of years. And consequently, the home that you've owned during the pandemic that has gone up in value so tremendously.
Yeah, exactly. I think, as we're entering into 2022, over 2020 and the year 2021, we saw quite an exponential growth in property value. And it does mean that, even when we're looking month over month and the prices have softened, they're still up quite high from, if you made the purchase 2, 3 years ago. So you're sitting on all that equity. And as you've been paying your mortgage down, you've been growing that equity as well.
Yeah, definitely. There's a lot of equity to be had there. And with a lot of folks with the property prices, some of them have gone up almost twice as high.
Mhm.
Uh, there's the ability to take out equity from your home. And with most lenders, you're able to actually access up to 80% of the market value of your home. So really, when you look at that, that could be hundreds of thousands of dollars. And that could be the down payment right there that you require for that rental property, just sitting there in your home equity, waiting to be utilized. So that's why Sam and I always recommend chatting with one of us at the office to get started, to get this rolling for you so we can see how much you qualify for. And what will be a third major, I guess, checkpoint that we would need to go through there, Sam?
And the third major one would be getting an appraisal. It's going to be required on the refinance to confirm that the property value is what we say it is. We're using accurate figures to make sure that you can get those funds released on the refinance.
Yeah, definitely on the refinance. We are seeing also a lot of folks do this right now. And with the refinances, it's the appraisal is an important step. So
Mhm.
make sure you're dealing with a mortgage professional that does have relationships with appraisers in your area, and that they are using an appraiser that knows the area well. And because it's really going to come down to that value a lot of the times as to how
Mhm.
much equity you are able to pull out.
Mhm.
So once we got all that done, we've consulted, we've got given you numbers, everything looks good. You've refinanced your home, you've gotten your appraisal. Well, that's when we actually sign all the paperwork, right? You finalize all that and sign the approval at the lawyer's office. And they are the ones that actually disperse the money to you, which is a fantastic moment, because then you realize that moment where you actually have those funds to be able to move forward with that purchase for your rental property.
Yeah, exactly. That's a big moment when you have that, those funds in your hand and you have, made action out of the equity that you've, saved up and that you've built by paying down your mortgage.
You bet, Sam. So right after you do that and all that is completed, you're able to receive the money once the refinance is completed. I guess I blended the two steps together, step 4 and 5. But once you have those funds, you deposit them into your account or wherever you need to go. And then we recommend step number 6 would be to consult with us again, because rates could have changed from the first numbers we would have gone over, because the refinance can take 30 to 60 days.
Yeah, exactly. You just want to make sure, that you still qualify for the amount that we, had originally quoted you on, as Joe was saying. And if you've been watching Canadian Mortgage Weekly, you've noticed that we have been commenting on the fact that, rates have changed quite quickly, and, have the ability to do so. So again, just double checking and confirming, what your maximum purchase price is. It's just an important step just to cover yourself so that there's no surprises further in the process.
You bet. That's right, Sam. And then once that's all set up and you have those numbers ready to go, and you're pre-qualified and you have those funds dispersed in your bank account, that's when the real action is ready to begin. You're ready to start pulling the trigger on that rental property. And you can get started with a real estate agent to actually actively look at these listings,
Mhm.
assess them, run the numbers, really consult with your legal professional team to make sure that you're looking at these properties through a fine-tooth comb and that you're investing in the right property. So again, Sam, myself, Terry Lynn, we're here always available to work with you on the numbers side, but a real
Mhm.
estate agent's going to be there working with you on the ground level, getting you into those properties. And that's why it's really important to really work with one that also knows investment properties, so they can help work with us and with you to run those numbers. So
Mhm.
um, yeah, that's an exciting spot. And then what will be the final step then after we found the property and everything is good there?
Yeah, and then the final step would just be doing all the lovely paperwork for the actual purchase. So once you find a property, you've submitted an offer, this looks good, it's been accepted, then we work on getting all the conditions finalized, we'll get some documents in, and then you'll do a final signing at our office and as well at the lawyer's office, just to firm up the purchase and make sure that everything looks good at that stage.
That's great. Yeah, it is a wonderful moment to be able to get to that stage.
Mhm.
Can be a stressful process. However, working with the right team, it shouldn't be stressful at all. It should be an exciting moment, and adding an investment to your portfolio like that. So,
Mhm.
this is a great way to buy an investment property. A lot of folks do it this way. They've owned their home for a number of years. Maybe yourself, you've owned your first home for 5 to 10 years. And at this point, your mortgage might be here, but your market value might be here. So you have all that equity that you have available that you can use to buy this investment property. And then, as you were saying, Sam, right now with the market the way it is, properties are a little bit on sale right now.
Yeah,
So
that's right.
great time to look out there. So as I mentioned that, I would say let's get into these statistics, the data that we normally review here on Canadian Mortgage Weekly. If we can get into the bond yield, we can start giving some information about what's happening with the market today. And I know
absolutely.
I know this bond yield has been quite exciting to watch over the last few weeks, especially. We have seen a little bit of a shift, haven't we?
We have. I mean, there's quite a number of peaks and valleys since that initial jump. Back in March, April, where we saw quite a high spike to the 2.5. So we're almost in a downward trend over the last number of weeks. I know that last week, from our last episode through to Friday, we had seen it trending down, and there was a bit of a spike there, but it really hasn't changed much from its new range. So I think we can expect fixed rates to remain high for now. But again, it will be interesting to see. It hasn't been able to break that previous ceiling that you see on the graph here, where it just about reached 3%. Since then, it's been on a downward trend. So we'll continue to monitor the 5-year bond yield just to see where that fixed rate is going to be going in the future.
Mm-hmm. Great review on that, Sam, and that's absolutely true. Yeah, we did see that high point there just maybe about a week ago now or so. But yeah, it has not made it back to that high point for a second time. We'll keep watching it on Canadian Mortgage Weekly here. Be an interesting rate yield to follow. I think the next 3-4 weeks is really going to show us where this is going to go.
Yeah, for sure.
Yeah. But yeah, and then moving on, we have the CDOR rate. Some news with this rate, everyone. The Bank of Canada did announce that they are going to cease publishing this rate come 2024, I believe that is, right, Sam? I think we were looking at that yesterday. So we'll make sure we'll cover that in another video. But in the meantime, looking at this today, we see that the variance from prime is still under 2%. So that's great news, Sam. And that's with the CDOR rate at 1.542%. So let's look at this here. All right. Still indicating that variable is a decent option to go ahead with as a mortgage. I know that the spread is quite wide on the range between a variable and a fixed. Can make a difference of a few $100s on a mortgage payment. But yeah, it's interesting to see the CDOR rate here. Also interesting to hear that they are not going to publish this any further come 2024. I wonder why that is, but we'll have to cover that a little bit more in a future video.
Yeah, it's definitely interesting.
Yeah. But yeah, definitely still a good variable. Variable is a good option. And if you are interested in why variable is a great option, Sam and I just did a video last week on Canadian Mortgage Weekly on 5 reasons why variable is a great option. And while you're here today, a bonus option, I guess would be that, I don't know if we talked about all the, was one reason, well, I can't really remember what that reason was. We'll have to come back to it next time, but definitely watch our video last week. And if you have any more questions about variable rate mortgages, do give us a call. We can always talk to you about that. Oh yes, I remember now. That was that if you can't qualify for a fixed rate, to take the variable rate and then lock into a fixed rate once you have your mortgage closed. And that would be a great way to get that fixed rate. Because right now we're seeing that you're able to qualify for more mortgage funds using a variable rate mortgage. So a little bit of an interesting way to get that fixed rate.
It's a good
In
tip.
the meantime, let's look at the upcoming Bank of Canada interest rate announcement. I know that's coming up on June the 1st. And it's a great moment for Canadian Mortgage Weekly. It'll be our 80th episode. And with rates going into what it seems like the 1980s, it's kind of a perfect uh, segue. What do we have to look forward to on the Bank of Canada announcement?
Yeah, of course. So again, it's on June 1st, so it's just under 2 weeks from now. And yeah, it'll be interesting to see. We will have our pre-rate show just before the rate announcement is released from the Bank of Canada. So it'll be interesting to see, what the Bank of Canada has in store. We'll cover off, articles leading up, what some economists are saying. I think, the sort of general predictions or the general census of sort of what we've been hearing is at least maybe one more rate hike by the end of the year, and then for it to remain the same. I know we mentioned last week we were at a Verico event and we had done a poll, and that was the general consensus of all of those brokers and agents and lenders, that the expectation is maybe one more rate hike. So it's, again, our 80th episode. It's not going to be one that you want to miss, because again, it'll help us track where that variable rate's going, and if we'll see a second increase, maybe another supersized rate hike, another half a point. But currently their overnight rate's 1%, but that's going to be June 1st where we'll decide what's going to be happening going forward with the overnight rate from the Bank of Canada.
Yeah, that's great, Sam. Yeah, that's wonderful to be able to just be here to announce that next week. We'll have to make sure that we bring our usual data on the pre-rate show and go over what the historical has been, and looking forward to the future, seeing what the Bank of Canada has in store for all the mortgage holders and all the Canadians here. And I know that one of the indicators of how far the Bank of Canada indicated they were going to go on the interest rate hike was that their impact was going to, like, they didn't want to impact the housing market too much. They just wanted to soften it a bit. I think that's sort of happened, because we have some data coming up right now here on the national house price average. And I know that we've seen a little bit of a reduction, wouldn't you say?
Yeah, that's right. I mean, it's been, maybe a bit of a relief for people that are hoping to get into the market to see the price come down from, its previous high of 816,000. We're now down to about 746,000 for April of 2022.
Yeah. And we haven't seen these prices really since, I guess, by the looks of this graph, late 2021. So if you're looking to get a house right now, you're looking at paying prices of around November of last year at this point, which is interesting, because I've run into a lot of people that have been saying, Joe, I think we've missed the boat. Prices have gone up so much. And this was just between last year and this year. So now those folks are probably wondering, this is a great time to get in.
Yeah.
Houses are on sale. And with that in mind, there was an article that came out that you and I, Sam, were looking at, talking about how the housing market is approaching a buyer's market. And as we see by this graph, that could very well be the case.
Yeah, exactly. There's lots of evidence to support that, even just in the way that purchases and sales are happening now. It's not quite as fast. Homes are staying on the market a bit longer. There's definitely way more properties for sale. I know that was another contributing factor to the tight market, was once something was released, it already had tons of offers on it, and buyers had that FOMO. But now also that there is a bit more options, the prices are softening a bit. It seems like the sentiment's changing a bit in some of those buyers, and it's less of a rush. Some conditions are maybe being seen in some deals which we haven't seen for quite a while.
Yeah, we are seeing home inspection conditions. We are seeing some financing conditions. Sometimes, there's even a waiting period now. So that's great to see that again. And I know with the average house price coming down, it's also made it a little bit easier for the average Canadian household to afford the home, whereas the income now has dropped to a requirement of $155,000 per household per year to buy the average house price, which is a little bit better, but still quite high.
Yeah, it's down from 2 side hustles to just 1 side hustle. Maybe you can get it done.
We're down to 1 side hustle. I mean, it's still quite difficult, but there's been a few brokers I've been listening to, and it sounds like, they all are saying we've been here before. House prices have softened. Back in 2016, they softened. Back in the start of COVID, they softened, but they've always gone back up. So, Sam and I are probably interested to hear what you have to say, where you think house prices are going. I know where I think they're going. I know with the immigration targets Canada has, it's not going to lessen the demand anytime soon. So, we're here to give you the information and let you make those judgment calls. And in the meantime, it's great to have this data. And as for that, it's also great to have you on the show today, Sam. Sam, you come from Ottawa area. I know you're going back to visit the fam this weekend, which is exciting. But yeah, living in Barrie now for over 2 years. You have your wife Grace, and your pup there, and been in the industry for over 2 years now. So great to have you on the show today.
Yeah, thanks so much for having me on the episode today. It was really good. Informative episode on how to get in with no money down into the investment market. And of course, Joe, you're no stranger to investments or investment properties. Joe's been in the industry for over 11 years, living in Aurelia with his wife and 2 kids. So a lot of insight and some personal experience in this area. So it was great to have, your expertise and your insight on today's episode, Joe.
Most definitely. And thanks for the kind words, Sam. And definitely have some personal experience in this area too. So if you ever are working with us, I'm happy to share any personal tidbits of information with investment properties as we go. And stay tuned for our next episode next week, which is going to be the BRRRR method. That's not counting the rate announcement episode. But the BRRRR method is episode next week. And we did a BRRRR method in detail last year. So we're going to be doing a quick overview of the BRRRR method next week as we continue on with Canadian Mortgage Weekly, Canada's weekly live mortgage video news podcast. And we'll talk to you later.